Hello and welcome into the KE Report. Chad and Corey here sitting down at the New Orleans Investment Conference with Avino Silver and Gold Mines, traded on the TSX under the ticker ASM and on the NYSE under the same ticker ASM. And we're joined today with the CFO of Avino Silver and Gold Mines, Nathan Harte. And Nathan, this is our annual, every year we do an interview with Avino just to get an update. You just put out on November 12th your Q3 financials. And so just from a high level, walk us through the key takeaways, some of the key metrics that you want investors to know about.
Sure, thanks. Great to be here in New Orleans. So our third quarter came out, as you mentioned, just last week. We had close to 15 million in revenue, about a 45% operating margin. So we generated almost 7 million in cash from the operation just before income taxes. We actually made money. We're a junior company that's making money, and our balance sheet is stronger than ever.
Now that you're making money, big stepping stone obviously gives you a bit more flexibility with what you do. How do you reinvest this money that you're making back into the business?
Sure, that's a great question. So right now we've got a development project called La Preciosa. We're just waiting to get the explosive permit on that from the military. It's separate from the environmental side. The environmental side is already dealt with. So that's our next catalyst, is when we can break ground after getting the blessing from the Army for the explosives permit. We're committed to putting most of our balance sheet back into the company as far as into La Preciosa and developing that, and with the goal of putting it in production in 2025.
Well, let's dig a little further into that in just a minute. I do want to mention that in this quarter, you actually had a pretty big pop and increase in production. So at the Avino mine itself, is there still room to keep optimizing and growing production?
There definitely is. We are taking more of a long-term approach to trying to increase the Avino mine. Our focus is increasing and adding La Preciosa first. And then we're going to, we've got a 5-year plan to get from 2.5 million ounces up to 8 to 10 million ounces. So with that involves some increased throughput at the Avino mill facility. We're looking at an optimization study down the road to add additional throughput capacity there. And then obviously, we've got a third project down the road. That's the Oxide Tailings Project, which is reprocessing the existing Avino open pit mining operations, which we did put out a pre-feasibility study on earlier in the year. And that's probably the next phase of growth. And that's, with those three, that's what takes us up from 8 to 10 million ounces.
So investors are still very much focused on costs. But you look at the comparative quarter to 2023, your cash cost per silver equivalent payable ounce down 12%, all-in sustaining costs per silver equivalent payable ounce down 3%. So you actually managed to cut costs. How and what are the forecasts moving forward?
Yeah, we did. So moving forward, obviously we've seen some weakening in the Mexican peso that's going to help our cost structure as we go into fourth quarter. Now we're halfway through it, and we're noticing an impact. And then into 25, we've taken some measures to make sure we lock those gains in, which is going to be good moving forward. As we add La Preciosa and as we get more economies of scale from additional ounces and additional production, the trend is we're trying to get under $20 all in sustaining cost. Long term, as we get looking 3 to 5 years down the road, we want to be under 15. And we think with having 3 assets in one single operation, it allows you to get economies of scale from having one strong management team, both in Mexico and in Canada. And by doing that, we'll be able to lower kind of that all-in number, because there's just less overhead per ounce.
Well, and I think a lot of people are looking at this as a growth-oriented company in the sense that you're going to be adding La Preciosa, and then after that, the Tailings Project. Walk us through how the production profile will change from where you're at now to when you add La Preciosa in and then maybe ramp up Avino. What does it look like as that phase of the project?
For sure. So right now, again, we're doing about 2.5 to 2.8 million ounces. That's our guidance. We're looking to be right in the middle of that. 40% of that is silver, 40% of that is copper, and 20% of that is gold essentially this year. Long term, we want to be over 60% silver, and that would be primarily from La Preciosa. Now, La Preciosa is 90% silver, 10% gold. So as we throttle that into our mill feed, it is also higher grade, so that automatically brings our total ounces produced up. And then, as we look at expansions and building the Oxide Tailings facility, that Oxide Tailings Project is about 50-50 gold and silver. So we're going to be more of a precious metals company specifically, but again, with a focus on silver. But then, we do like copper too, and Avino has a lot of optionality with copper at depth.
Something that stood out to me so far this year compared to last year is that gold production is not a big component of the company. It's slightly down, but the silver ounces produced, copper pounds produced, those were all up with pretty much the same amount of tons milled. So What happened with the grade? How are you able to produce so much more silver and copper by mining the same amount of material?
Yeah, so a lot of it is just comes down to mine sequencing and where we're operating in the mine. As you're higher up in the Avino system, you get usually more gold and silver, and as you get deeper down in the system, you get more copper. So one of the areas of upside with Avino and long-term exploration is we're looking to go deeper and look into see if we can find the source of the Avino system, because after 500 years, we still haven't found it. But there's a lot of exploration at depth we can do to find more copper. But as far as production now and this year and next year, you're going to see some swings up and down quarter over quarter, but generally the average for the year and what we're going to see is, that 40% silver, 40% copper, 20% gold from Avino.
Well, and let's also talk about the optionality you have to if copper prices were to pop back up to $5 again, or if silver was to get back up to 35, what does that do to the metal sensitivities to the potential to maybe move things along even faster or at least increase revenues?
Yeah, I mean, we are doing a good job at making money and then using that money to reinvest in our existing or, developing operations. I think, management, we're heavily aligned with shareholders. We're 6-7% owners as a management group. We don't really want to dilute ourselves with no purpose. So I think we're going to try and use cash flows generated as much as possible to accelerate these development projects. And then, looking down the road, if silver really starts to accelerate, if copper really starts to accelerate, and there's a chance to turn the Avino mine into something much larger. I mean, when we came together with this plan with David and the team to, go up to a mid-sized producer, 8 to 10 million silver, so call it 100 or 120,000 gold equivalent ounces. This was before the rally. So we then, this is something we thought was manageable with organic growth, but if there's further increases in prices, and we're continuing to make more and more money, we can look at things a lot differently and look at some optimization plans on the whole district.
How quickly could you bring those into play? How quick could you expand if you wanted to?
Fairly quick. I mean, we have an existing mill. We have an existing power line. We have a 5 megawatt power line. We're using about 50% capacity right now. We have water supply. We have a dam. We're mining with all the infrastructure in place with the ability to bolt on to that. I mean, with adding La Preciosa, we're not building a brand new mill facility. We're going to process it at Avino. And if we can scale up and add more throughput capacity at Avino, then we can still do the same thing at Avino, and we can increase in La Preciosa. So again, organic growth without having to spend hundreds of millions on a brand new facility. So we think this isn't going to take 5 or 10 years to do some additional capital upgrades. It's things we could do in 1 to 2 years because it's bolt-on. It's not starting from scratch.
Well, let's dig into that a little bit further as far as the timeline. What steps need to happen as far as permitting? What kind of de-risking needs to happen? What is the team doing in the background to bring La Preciosa into production? A lot of people have their eyes on the prize, but when does it happen, Nathan?
When does it happen? Crystal ball. So as I mentioned before, we're in the final stages of just waiting on the explosives permit. If we get that, by the end of this year or the beginning of next year, I mean, coming into the holiday season, so now it's getting a little close, but we're still hopeful for the end of this year. We can break grounds within a week. We have the equipment from the Avino facility. We have a line of credit set up with Caterpillar. We're ready. We have the equipment. That's not an issue. It's, can we accelerate the growth plans from La Preciosa that we already have? Like we plan to fully be into production mining and developed in the first couple of levels within 6 months. It's only 350 meters of development to our first initial plan, which gets us producing in the second half of 2025, assuming we can meet these milestones. Now, to continue accelerating that, whether it's adding additional faces or adding additional development, or perhaps we're contemplating added a second portal, to just be able to take more tonnage out. That would take a bit more time and a bit more cash, but, right now our balance sheet is strong. We have over 20 million in the bank as of today, and we're ready to capitalize on any of the headwinds that are coming with silver.
And you're making money.
And we're making money.
But cash-wise, how much is it going to cost that first 6 months of development, and then that, let's call it phase 2? What's the money figure?
So phase 1 is 3 to 4 million. Yeah, that's just initial development costs, and that gets us developed about 1 million tons. And then as we look over to that's just the one main vein, the Gloria vein, and then the additional vein is the Abundancia vein, which contains about 3 to 4 million tons. So that'll be, probably another 5 million in development.
Well, let's look further afield to the Tailings Project. I know that's still a couple years out, but how does that then add to La Preciosa and Avino as the third component to this longer-term strategy?
Yeah, so the Tailings Project is the historical open pit leftover waste from when they open pit mined in the 70s, 80s, 90s, prior to heap leaching, prior to some of the technology that is, in place today. That project, has a standalone PFS. It's got a $50 million capex, but at spot price, it's 120 million NPV5. So it pays itself back in 2 years and adds about 1.5 to 2 million silver equivalent ounces a year to our production profile for 9 years. And I mean, it's tailings, it's a finite resource. You're not getting exploration upside from that, but it's a bolt-on operation to what we already have, and it adds, meaningful ounces at about $10 all-in sustaining costs.
Hey, you can take advantage of the higher metals price then. So bring it on when you want. What about acquiring? Are you on the acquisition front to truly ramp up production, or are you a potential acquiree because you're now at this stable rate of production?
Yeah, I'll answer the first part. I think we're looking at organic growth. We're really looking at what we have in our stable and developing that. We have 370 million ounces of silver equivalent in our resource stable. It's fairly large. Do we want to accelerate putting some of that into production faster? For sure. And I mean, that's the initial goal from a manageable scale. Looking to the other side of that as, a potential acquiree or being acquired, we're still too cheap to even be considering that. I think we have a lot of work to do to get the share price up. And, as I mentioned earlier, management is fairly heavily invested in the company as well, too. We understand we're probably on some people's radar, and especially as we get some of these catalysts going with La Preciosa. But my message on that front is not yet.
Yeah, I think a lot of shareholders would like to see the share price keep appreciating before something like that happens, but keeping the door open for you to look at acquisitions as well. I guess just as we round things out here, what are the key catalysts you really want people focused on through the end of the year, but importantly, rolling into the first half of 2025?
For sure. I think first one is going to be the permit from La Preciosa and announcing that we've broken ground. I think that's probably key, and that's what a lot of investors are waiting for right now. We were hopeful to get it earlier this year, and bureaucracy does unfortunately take some time. The requirements changed a lot since the last time we had to make one of these submissions. Again, we acquired La Preciosa, the entity, not just the asset. So it's a new submission under a new name, and so having to go back and forth and close off some existing permits that Core left, that took a bit more extra time than anticipated. But I think once we get that, there's a re-rating coming. And then the next step will be, I think our year-end financials are going to surprise people with our balance sheet and with, our operating results for the fourth quarter too.
Let's talk valuation then. You use the term re-rating. You have $20 million on the balance sheet. You're in production. You are making money now. Where does the market cap stand? What can we compare it to?
Currently right now, so I think we're about 160, 170 million in US market cap. I think it puts us right around, I think we're at about a 0.6 PNAV right now. You look at some of the junior producers, obviously some developers, you look at a PNAV and it's completely out of whack. But some of the producers in the junior and the mid tiers they're trading at 1.2, up to 1.5. Some of these. I mean, some of the Silvercrest and the Gatos, those are trading very high, obviously for other reasons. But you look at Endeavor Silver, you look at some of the other producers in Mexico, and we want to get that re-rating and that increase in valuation. And we think we're delivering on what we're promising. And I think again, the permit will be one. And then also just continuing to deliver on our financial results will help.
All right, well, we'll wrap it up there, but it was great getting an update on Avino Silver and Gold. And for people listening in, if you want to follow along with the news, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, so you too can follow along. Nathan, it was great to get the update here on the floor of the New Orleans Investment Conference. We'll be watching for those quarterly improvements in revenue and looking forward to our next conversation.
Thank you. Appreciate it very much.